Well, Redfin data says it all. Nearly 56,000 transactions were canceled in August. And folks, that's a rate of 15%. Basically, you've got 15% of all buyers walking away from deals before they're actually closed in the housing market. And in some metros throughout the US, including here in Columbus, that number is much higher, upwards of 20% of all transactions were canceled in August. It looks like financing in some of these situations is collapsing. Inspections are crushing deals. And in general, even sellers may be walking away from some of these transactions. And so we also have home prices are falling in a lot of areas through the US, some upwards of $100,000 in year-over-year price. I'm sorry, $100,000 since 2022 in home price decline. But we also have some areas where home prices continue to rise. And that's what we're looking at today on the Housing Nerd. So welcome. My name is Jason Ferrier. I am a realtor. I'm an investor just outside of Columbus, Ohio. Good morning to you. Thanks for joining me on this Friday morning. And this is all about a recap of the latest Redfin housing market data. And then I'm going to look at metros that you want me to review. I've got a new way of looking at metros and counties and zip codes I think you're really going to enjoy. And it's your chance to learn about the housing market. I am not your typical realtor, by the way. I am not going to tell you you need to run out and buy a home today and that, I'm not going to cheerlead. That's just not what I do. And I'm also not going to tell you that the market has never been so toxic and you should just sit on the sidelines for the next 5 years, hoping that the market crashes in order for you to find the deal of your dreams. I'm not here to sell you doom. I'm not here to cheerlead. Just here to give you the data you need to make the right decision. So with that, let's get started. And please do me a favor, hit the like button if you join. It doesn't cost you anything. It only takes a second. So we'll start with this article here from Redfin. And I think this is pretty telling as to what's happening. First, I'll just say good morning to a couple of people. Manya Pablo, what's up? Cook County, Illinois. Okay, you have some inventory now. All right, we'll take a look at that. Stephen Rogers, good morning. Good morning to you too. So this article from Redfin says home buyers are canceling deals at a record rate. So we're going to review a couple different articles from Redfin to start off with, and then I'll go into the data. But they say roughly 56,000 home purchase agreements were canceled in August. That's equal to 15% of homes that went under contract that month. That's the highest percentage going back to 2017. And we're also going to look at why they backed out of these deals. I thought this was pretty interesting how they say home buyers in America are getting cold feet. And I highlighted down here a couple of things that I think were kind of topical when you think about the purchase contracts being canceled. Home purchases are falling through more frequently because buyers and sellers oftentimes aren't on the same page and aren't willing to compromise. Buyers are skittish and selective due to high prices, high mortgage rates, and economic uncertainty. And I want you to comment and tell me, are you skittish because of high prices, high mortgage rates, and economic uncertainty? A lot of people are. They say many sellers are still operating like it's 2021. And that's true. I think there's a lot of sellers out there right now that think that it's 2021 and that they need to sell their home for top dollar. Some are having a hard time adjusting to the reality that it's no longer a seller's market, because it seems like just yesterday that homes were getting dozens of offers and fetching tens of thousands of dollars over asking price. Remember those days? I do. Sellers who purchased their homes during the peak of the pandemic housing boom frenzy are also often unwilling to negotiate because they need to sell their homes for a certain price to avoid taking a loss. Yeah, I'm seeing a lot of sellers delist and walk away from homes. In fact, as we go into this data, you're going to see that active inventory has been falling, which is like completely not what I think a lot of people expected. I think a lot of people expected by this point that there would be massive amounts of inventory in the US. Like, some people unfortunately predicted that it would be like GFC levels of inventory. We're talking like 4 million homes on the market. Well, we're not seeing that. Inventory is actually falling. It's only up like 9% year over year. It's still not above pre-pandemic levels. Don't get it twisted. It's not. We'll look at that in a minute. But make no mistake, there are a lot of areas of the U.S. Maybe that's you. It looks like maybe it's Cook County, according to one of my one of the folks on said that Cook County has a lot of inventory. So maybe that's what's going on. You got a lot of inventory in certain markets. I'd like to know what's happening in your neck of the woods, but yeah, it's inventory is increasing, and because of that, I think a lot of sellers think that, hey, I'm just going to go ahead and sell over asking or over what I should. They're going to list it for a higher price, and then what happens? It sits on the market, right? It sits on the market for a while, and then they try to drop the price, and then eventually they just pull the listing from the market. At least that's what I'm seeing. And you can see the delisted homes are skyrocketing. Price cuts are skyrocketing. So sellers think, hey, this house, I should sell it. Should probably put it on the market for 250 or 500 or 750, whatever they think. And instead they go, you know what? I'm going to put it on for 775. We're going to start high, drop it down. Tell me if you've heard that before. That does not work in a normal market. It certainly doesn't work in a market where demand is really low like it is now. It just doesn't work. So I think that's what's going on. And then the sellers pulling the house from the market and taking their toys and going home. This was pretty interesting. So this is the reason why buyers are backing out. Home buyers often back out of deals due to inspection issues, sorry. So that 70%, when they did a survey, Redfin did, they say that 70% of buyers are canceling deals because of the home inspection or repair issue. Now, I'll tell you, as a realtor, I run into situations all the time where the buyer cancels the deal because of an inspection. However, in reality, it's because they may have found another property, or it could be because they, decide they couldn't afford the financing and they're too embarrassed to say it. So in a lot of cases, the inspection is kind of used as a scapegoat, in my opinion. But one of the other reasons is buyer financing fell through 28% of the time. Buyer unable to sell the current home 21% of the time. Buyer found another property they like 13% of the time. So there's some other ones on here. Seller backed out 11% of the time. Why would you think the seller would back out? Why would you think that would happen? One of the reasons could be because they couldn't sell their current home. That's very possible. Like the home sale that they couldn't buy their next home. That's what I meant to say. So in other words, they're in contract to sell their current home, but the home that they were going to buy fell through, or they couldn't find a home that made sense for them. So because of that, they had to cancel the deal on the home they had in contract with the buyer. So sellers are walking away too. Insurance issues. Look at this. Too expensive or couldn't get coverage 7% of the time. High mortgage rates, only 6.5% of the time. I thought that was really interesting. So you hear these folks say, hey, look, mortgage rates need to come down in order for us to move more housing, in order for the market to free up. Shoot. I mean, you hear it all the time in the news, like, hey, the administration is trying to get the interest rate lower to free up the housing market. Well, only 6.5% of the time did buyers walk away because of higher mortgage rates. So it could just be higher prices. But comment and tell me what you think. I think I know what it is, but let me know tell us in the comments. I think it's more likely prices than rates. Though in a lot of cases, it's a combination because you're talking about the payment, right? Low appraisals on here, 7.9% of the time. So anyway, I thought that was kind of interesting. Like, 8% of the time, buyers are walking away or the deal's getting killed because of a low appraisal. I mean, it's not 2021 anymore. You're going to see that in a minute when I look at some of this metro level data. And again, it's going to blow your mind when you see some of this information, because there's a new data system I'm using that's pretty powerful. All right, let's look at the Redfin article. This is the weekly update article. And so what you've got going on is you've got new listings in the U.S. They rose 2.3% year over year during the 4 weeks ending October 5th, the biggest increase in over 3 months. So until this week, we've seen continual decline in new listings, sellers putting their homes on the market. Now, what you're seeing is more sellers enter the market than last year, though not a ton more, but you're still seeing buyers kind of stay on the sidelines. And they say, but buyers aren't budging. Pending sales fell 1.3% from a year ago. So demand is actually lower than it was last year. That's the biggest decline in 5 months. And the typical home that sells is taking 48 days to go under contract. That's a week longer than last year and the longest September span since 2019. So buyers are vanishing. They're like, you know what? I'm really not going to stick it out in this deal. And that's causing pending sales to fall. And houses are just sitting longer. They are. Although if it's priced right, it's moving. Redfin agents in much of the country say house hunters are waiting for lower rates. So maybe I'm wrong. They're waiting for rates to drop more before making a move. Okay. Some prospective buyers are also wary of making a big purchase while the economy is uncertain. There hasn't been a time when the economy is certain, has it? I mean, not in my lifetime anyway. Ever since I became aware of the economy, whenever that was years ago, I don't remember a time when people were like, you know what, the economy is completely certain. We know exactly what's going to happen. This is what's happening, and there's no doubt about it. Wrong, incorrect. The economy is always uncertain. I hate it when they say that. And the government shutdown and recent weak jobs report making some Americans insecure about their finances. Okay, well, if you have a job and you are close to revenue in your job and you're not kind of a waste of space in your job and you're doing a good job for the company, that's all you can do. If you work for yourself, well, you know how your business is doing, right? So I don't know. I mean, the weak jobs report, is that going to make you skittish about your finances? Maybe it will. I don't know. Doesn't me. I'm like, well, I mean, if you lose your job, then you lose your job. If you don't, then you don't, right? It's a buyer's market with house hunters asking for price reductions, doing inspections, and requesting concessions. I'm working with several buyers right now as an agent, obviously. And in all cases, they are buying a house under asking price. We're closing under the asking price, even after the house was reduced. So you better be asking for a price reduction. You better be doing inspections. You better be requesting concessions if you're a buyer. You better be. Like, this is the time to do that. I mean, don't get it twisted. Don't think that that this is 2021 and you got to pay over asking. In some cases, that's still happening. It's not like it's, real estate nirvana everywhere for buyers. But in a lot of cases, it is. Like, if I'm looking for a new home right now, or I'm looking for a home and I'm in like the South, I'm going shopping for a new home. And I'm looking and doing inspections. I'm writing offers. I'm beating those builders up left and right. I mean, I'm coming in with offers that make people cringe. And I'm doing it over and over and over again until I win one. And you will win one if you keep doing that. In terms of making offers, this is awesome. Check this out. I love this line. In terms of making offers, buyers are throwing spaghetti at a wall to see what sticks. Sellers who want to make it stick will, for example. One of my sellers who needed to move was getting desperate. Read this line again. For example, one of my sellers who needed to move was getting desperate. We get lulled into these you get lulled into what's happening because it moves, the real estate market moves slow from a supply end anyway. And so it's easy to forget that just a few years ago, just a couple years ago, sellers weren't desperate. But this Redfin agent, you've got a realtor working for Redfin. Many of y'all think the realtors are evil or, grifters, whatever term you want to use. And the guy works for Redfin. So double bad, right? In a lot of people's eyes. But he's even admitting the sellers needed to move and they were getting desperate after their house had been on the market for over 100 days. She sold the house for $15,000 under asking and included the furniture, the outdoor amenities like a barbecue and fire pit, which are a pain in the rear to move anyway. If you've moved and you've moved outdoor furniture, a barbecue, a fire pit, those suck to move. They do. They don't fit in the moving truck very well anyway. They just aren't fun. So no surprise there. Probably didn't cost them much to get rid of them, but they sold it under asking and they were desperate. So that's what, if I'm a buyer, I am throwing spaghetti at a wall and seeing what sticks. That's what I'm doing. And if you're a seller in today's market, depending on where you are, depending on what your inventory situation looks like, you must, it's absolutely imperative to price that home correctly coming out of the gate and realize that buyers are going to be throwing spaghetti at a wall, trying to see what sticks. So don't be shocked if a buyer cancels a deal. Don't be shocked if you get an offer lower than asking. And look at this part here. They were getting desperate after the house had been on the market for over 100 days. Higher for longer. All right, let's go down here. So if we look, this line right here is probably important too. I forgot to highlight this. Buyers looking for a deal may want to consider a condo. There are 72% more condo sellers than buyers nationwide, a bigger gap than other home types. It's true. If you strip out condos from the data, it looks a lot different. But hey, it's residential real estate. It is what it is. But the point is, there's a lot more condos on the market than condo buyers right now, especially in the South, places like Florida. HOA fees are off the hook because a lot of condo associations didn't plan right. And an HOA fee is really a throwaway. Like you can't write it off. It's not a tax. You can't do anything with it. It's just a fee. And quite frankly, they can raise them as much as they want. So if you're getting ready to buy a condo, you should definitely do the due diligence on the association. All right, let's look at some leading indicators. Then I'll look at any comments after I'm done with this part. We'll look at the leading indicators. Then we'll look at the national picture from a data standpoint. Then I'm going to dive into some metros. Again, I think you're really going to enjoy that, the new way I'm doing that. All right, so indicators of home buying demand and activity. 30-year fixed mortgage rate, 6.36%. That's up from 12-month low of 6.13%. 3 weeks ago, approximately, mortgage rates were nearly at 5.99%. They got close. The Fed cut. They went up. Everybody knew that was going to happen. It's not rocket science. But last year at this time, mortgage rates were actually lower. Look at that, up from 6.26% this time last year. And then the Fed cut last year and mortgage rates went up. So I think it happened a little later last year when it went down and then up. Nonetheless, they're at 6.36%, which, by the way, isn't a bad rate. Like people are like, that's a high rate. It depends. I guess it depends on where you are right now in your finances. But like 6.36%, I don't know, man. I'm not one of those rate people that think that rates need to come down to 4%. Oops. I think that would be unhealthy for the market. I don't think we need 4% rates. I think we need rates to stay where they are. Let the market, ride it out at this point. If you can't afford a house right now because of a rate, maybe you shouldn't buy a house. Right? Maybe you shouldn't buy a house. If 30 basis points is going to make you buy a home, probably not something you should be doing. And I think that needs to continue to weed out people who shouldn't be buying a home kind of, weed out the investors that don't know what they're doing and just, bought a flip purchased it for way too much. And now they can't sell it. So I think that the higher rates will weed those people out, but let me know what you think. Let's go down to mortgage purchase applications. Look at this. This is the first time they didn't mention this, but I haven't seen mortgage purchase applications decline recently, but they're down from 1 week earlier. They're still up 14% from last year. Redfin Homebuyer Demand Index down about 1% from a month earlier. Okay. Bear with me. But down 13% from a year earlier. So I don't know. I don't put much stock into that Redfin Homebuyer Demand Index. Google searches for homes for sale up 6%. I like this metric because this is like you can actually click this Google trend. I don't know if you know this or not, but you can click this Google trend and it'll actually show you who's Googling, where they're Googling, and what they're Googling on the housing market. And you can see it's definitely fallen. I mean, look at 2020. Homes for sale, somebody actually typing in homes for sale on Google was a lot higher. So that's definitely happening. It's slowing down as far as the number of people, from 2020, but it's up 20% as far as Google trends go. Touring activity up 18% from the start of the year. At this time last year, it was up 3% from the start of 2024. So I guess it's up 15% year over year, the number of people actually seeing homes. And that's part of what you should do. If you look beyond the affordability factor of a house, because that's obviously something you have to understand. Go out and see as many homes as you can. Find an agent and a realtor that will show you 100 houses. Look at 100 homes. Look at 100 homes over a 2-year period if you have to. Make 50 offers. Nothing wrong with that. You're not going to go to jail because you make a lot of offers and see a lot of homes. It's going to cost you time, but that's it, right? All right, so these are the national metrics. We'll look at pricing, supply, all that jazz. Median sale price, $389,350. The biggest increase in 6 months. Why is that? Well, one reason is homes in general are more expensive than they were last year. And there aren't a lot of affordable homes that people actually want that are actually selling. There are homes in Ohio under 100 grand, for instance, but they're either really tiny, out in the middle of nowhere, against a railroad track, or they need $150,000 in work to move into, like a new foundation, a new roof. Only 1.7% of all homes in Ohio were built after 2020. I'm sorry. Yeah, 2020. 1.7%. So, for instance, in Ohio, everything's old. So that's why more expensive homes are selling, because they're actually, in some cases anyway, updated. Median asking price, $401,242. I've heard people say that the median asking price is what you need to watch because this will fall this year. Hasn't fallen yet overall. And again, this is national, not local. And we'll get to that in a minute. Median monthly mortgage payment, $2,580 at 6.34%. That's up 2.1%. So it's more expensive now to buy a home than it was last year. Whatever, right? Pending sales, $79,690, down 1.3%. That's the biggest decline in 5 months. Buyers have pulled back. I thought we'd see an uptick when mortgage rates floated down from like 6.8, 6.7, 6.6 area down into the 6.3s. I thought we would see a decline or an increase in demand, but we really haven't nationally. In some pockets we have. I think that the demand, blah, blah, blah. I think the demand is up here in Columbus a little bit, here in Ohio, in some areas, but in a lot of areas, it's not up. New listings, people actually entering the market, the biggest increase in about 4 months. If you're hoping for a housing market crash, if you're hoping for doom, are you? You could be, and that's okay. I welcome everybody here to my channel. Housing bears, housing bulls, all that stuff. I think you know, the new listings is what you need to watch if you're hoping for a crash. That's what you have to watch, because that's going to show you the distress. If somebody's in distress, they're going to sell their home. If they're like, you know what, I got to sell my house, I got to move in with a relative, a friend, I've got to rent, I need the cash to pay off bills, I can't afford property taxes, I can't afford insurance anymore. I mean, they will just, they'll put their home on the market. And so the more distress in the economy, the more you'll see new listings increase. So they have increased year over year, but they're not explosive by any means. I mean, this number was like 250,000, I think, during the GFC per week. 250,000. Now we're at 91,000. Active listings, 1,212,000, 8% increase year over year. That's it. It's the smallest increase since February of 2020. You've got a combination of some buyers, coupled with low new listings in general, coupled with the fact that a lot of sellers don't need to sell. They just want to sell. So because they don't need to sell, they're like, nah, I'm not going to sell. If I can't get my price, I'll take it off the market and wait for better days. Seeing that in a lot of cases, and that angers a lot of people. A lot of people are angered by the fact that sellers, a lot of them don't need to sell. They're like, nah, I'm good. Kick rocks. I don't need to sell. But that's the reality. Way different than the GFC, at least so far. Months of supply, 4.4. That's up 0.3 points. Basically, they're saying it's a balanced market right now. Share of homes off the market in 2 weeks or less, 31%. Median days on market, 48. Look at that. Up 7 days. Holy shnikes. Share of homes sold above list price, 23%. Average sale to list price ratio, 98.4, down from 98. So no longer is it 100% or over 100%, where people are paying over 100% of the asking price. Thank goodness, right? Thank goodness. All right, metro level highlights. This is just a quick overview of where the winners and losers are. Median sale price, where they increased the most: Detroit, Cleveland, Providence, Rhode Island, San Jose, California, and Cincinnati, the nasty natty. Metros with the biggest year-over-year decreases in median sale price: Dallas, Austin, Houston, Atlanta, Tampa, basically all in the South. Everybody knows that. That's where the most carnage is. Pending sales, where homes are going into contract the most: San Francisco, West Palm Beach, Cleveland, Riverside, C-Bus right here. See, demand up here, demand up in Cleveland, up a good amount. Those are pending sales, though, not closed transactions. Important to keep that in mind. Houston, Seattle, San Antonio, Denver, Las Vegas is where pending sales are decreasing the most. New listings, where are we gaining more inventory? Washington, D.C., Pittsburgh, Philly, Detroit, Montgomery County, PA. Where are we losing inventory? This will blow your mind. Orlando, San Antonio, Anaheim, Denver, Fort Lauderdale. So all these places where Airbnb would cause a massive housing crash, mom and pop investors would be doomed. I don't know. Any other reason the doomers have to say that a market is going to completely fall apart. That's not happening right now with new listings. In the markets where I think they had it on their bingo card, it would increase. But you let me know what you think. Might be reading this wrong. I don't know. Anyway, that's the national look overall. I'll review this real quick. Median sale price here, you can see, hasn't fallen below last year at all. Didn't do it last year either. Median asking price, still elevated. Homebuyer housing payments, $2,598. That's up 2.1% year over year, although it is lower than 2023. Pending sales down. Look at this. You just can't catch a break right here, right? So pending sales are lower than last year. New listings up, and it's kind of trending upwards. That's good. If we want more inventory, that's good. This is the bad one, though. Active inventory. Look how it's falling. Now it's starting to level off slightly, but it's still, and this is a 4-week rolling average, by the way. So this is the most up-to-date real estate data available. It's only up 8% year over year, though. And remember, during like the worst times of the housing market in 2008, 9, 10, 11, 12, we had 4 million homes on the market. Now we've got 1.2. So still need a lot of inventory. And we've obviously gained population. I know. We have 15 million vacant homes and we don't need any more new homes and we don't need any more supply. I don't believe that, but that's a story for another day. 4.4 months of supply. This is interesting that this went down the same time it went down last year. I thought this chart was caught my eye because look, you can see 31% of pending sales are under contract in 2 weeks or less. And that number is increasing. I was surprised to see that. And then here's that median days, 48 days, and that's going up. So homes are just taking longer to sell overall, if you look at the median. All right, let me look at some comments, then I'm going to get to the next thing. Mortgage Nerd, what's up? Good morning to you, sir. Mortgage Nerd. Connie Stinson, how are you doing, Connie? North Platte, Nebraska, right? Inspections are deal breakers. North Platte simply lies. Their inspectors are bought by real estate agents. I spoke to a few who bought places they should have been condemned but sold overpriced. I don't know how it is in Nebraska, Connie, but in Ohio anyway, you can't do that. I mean, I guess you can. Like it's physically possible to buy off an inspector, I suppose. But legally, I have to give a buyer 3 options. And if I took a kickback from an inspection company, or if an inspector took a kickback from me, whoo boy, you lose your license for that. You lose your license. So you can't do that. But make no mistake, funny business goes on. But it's good to see you this morning. Thank you. And if you want, I'll look at North Platte coming up. Stunfish, how you doing? Good to see you. Always do that, right? An inspection, Steve? Yes. What's happening, Steve? How you doing, man? Good to see you. DJ Forecast. Good morning. Yes, things are going well. Rates need to stay up to force prices down. Lower rates only justify bad prices. I agree. I think it justifies bad prices. I think it justifies bad decisions. To me, as an investor, I mean, obviously, I'd want lower rates to be able to refi, right? Refi some properties, go buy some other ones. It makes buying deals easier. But that may be the problem, according to Stunfish. And I agree. You got to, the rates are, I mean, if they lower rates, will I be like, oh, I'm not going to take advantage of them? No, I'm definitely going to take advantage. If the rates got to 4%, I'm going to take advantage of it, as you should too. But I don't think it's healthy for the overall housing market. What's up, Carissa? How are you? Oh, DJ Forecast. What's your prediction on the housing market for 2026? My prediction? Pain. No, just kidding. I'm going to work on that coming up in the next month or so. I'll launch my forecast. I actually, I predicted at the beginning of, or the end of 2024, we would be up to 1.5% to 2% year over year. And I've got a whole prediction list that I saved from the beginning of the year on all the different folks, what they predicted and where we'll end up. So I'll do it again next year. But I think we're just going to, if things continue the way they are, DJ, I think we'll continue to see a frozen, slow grind housing market where you have prices grinding higher in some areas where inventory is very low, because those areas do exist. And then you'll see areas where prices are kind of meandering along at 1%, maybe 0%, maybe down 1%. And then you'll have areas where prices are actually dropping, substantially, 3, 4, 5, 6% year over year. I just think you'll continue to see this play out as more bad stuff gets worked out of the housing market. You also have foreclosures coming, supposedly, right? I mean, I am seeing more foreclosures on the market, which is a natural part of the market, by the way, but they're ending the student loan. I'm sorry, they're ending the mortgage forbearance for FHA. That's going to hit the market at some point, as long as they don't extend and pretend. But I don't think the market is going to completely fall apart. Like, I don't think that's going to happen. There's just too many homeowners that don't need to sell. Even with higher rates, higher taxes, higher insurance, a lot of sellers don't need to sell. And I think they'll just stay put. I mean, real estate's slow. If anything, I've learned from doing this YouTube stuff and being a realtor and investor, it's slow. The supply end's slow anyway. Very slow. So I think that, so a lot of it will depend on inventory, and it'll also depend on policy, right? Economic policy and what they do there. I mean, but if everything just keeps going the way it is, I think slow grind, sideways, could be for a few years like this. Slow transactions maybe still. Who knows? Orlando doesn't allow Airbnb. Oh, that's good to know. Huh. A lot of places are banning them. Should look at active listing in Hayes, Kansas. It's going parabolic during time when inventory usually drops. We're going to look at that one. I can't wait. With higher prices today, I don't see much future upside in value for those new owners buying right now. That's a great point, Modus. If you're buying a home to live in right now, plan to be there for 10 or 15 years. That's the normal market, right? I mean, I remember when I bought my first house in 13 or so, 2014. And I wasn't in real estate then, but I bought my, I think it was 2012, I think. I bought my first house. I think a couple years later, we were like, you know what? We want to move school districts. And so we went to sell it and couldn't really sell it. I mean, I couldn't make any money on it. It would have been like a break even. That's a normal market, to your point, Modus, right? So you got to plan on being there for 10 or 15 years, or you probably won't make much money, if any at all. But that's normal because there's cost to sell property. Now, it depends on if you put money down, but if you put money down, you're really not profiting, right? It's not a cash on cash return type thing. Maybe you get money back at closing, but you put money down on the property. So especially if you're putting only 3.5% down, or you're an FHA buyer or something, then you can really have a problem, right? You could be completely upside down if you need to sell. So you got to watch those things. No doubt about it in a normal market. Great point. Mortgage nerd. I do free portfolio analysis to find the equity that makes most sense to pull for additional purchases. Yeah, Steve is the mortgage nerd here. He is right. He'll do a free portfolio analysis. He's done one for me before. If you own multiple properties, what he's saying is he'll look at those and say, okay, here's where you can kind of move the chess pieces around to free up some equity to maybe buy something else, do some rehab on a property. That's something Steve offers. So, Steve, in the comments, once you put how to contact you, and then people can reach out. Great. Those are great comments. So let's get to this market analysis by Metro. So I am, let me plug my power in. I need power. Let's see, what time is it? It is 8:54. So I've got to end this right before 10 a.m. I've got another video to do with another individual. All right. You guys are going to be blown away by this next part, I think. I haven't left my computer since this was launched, by the way. I've stayed on my computer the entire time, 24 hours a day. Just kidding, but seriously, this is pretty sweet. So let's do, watch this. Let's do to Columbus, Ohio. This is the new Resi Club terminal. This is awesome. It's only for premium subscribers. So I'd recommend going to Resi Club Analytics if you want access to this and subscribing to their membership. But Lance at Resi Club has everyone beat when it comes to housing market analysis. So in Columbus, for instance, if I look here, I can see that home prices, now this is Zillow data, but that's what we're going to use because that's how Lance does the analysis. And this is the same data, raw data like Reventure Consulting uses. 1.4% increase in home prices year over year. And if I zoom out of the map, I can see here's all the metros. Blue is up, orange is down, red is really down. So like, look at San Francisco, Hayward. It'll show us the percentage year over year of increases. Let me see if I can. Yeah. So right now, like San Francisco's down 3.9%. But if I go back to Columbus, you can see up 1.4%. right? And you can just see the way that the home prices increased substantially back in May 2021. They were up 18.8% year over year. Look at that, folks. 18% year over year in that 1 month. COVID crushed the housing market. If anything, this shows how COVID destroyed the housing market. You can also see where it pulled back, right? In 2007, 8, 9, you can see all the decline we had in the housing market. Again, this data is unbelievable. So now you can see the home price growth has declined substantially. If I want to look at just raw prices, then I can come here and look at that. So in Columbus, for instance, you can see how home prices dipped during the great financial crisis. Then they went up and skyrocketed during COVID. And now they've kind of leveled off. Important to know, and I like this from Zillow. This shows you the typical value for a single family home in the 35th to 65th percentile range, meaning they take out all the stuff below 35% and they take everything out above 65%. So they are only talking about the typical house. I like that. That takes out the outliers, right? Oh, I bought a house for, $50,000 that needs $200,000 in work. Well, that's not on here. They also take out the $1 million homes. They're just talking about that median value. I think that's pretty cool the way they do that. That's why some of these values will be a little bit lower than what you would maybe see from the median price. And this is using Zillow data again. They actually look at condo inventory too, and condo prices. But if I go back to San Francisco, I can see, look how it went up during COVID to $823,000 and then dropped. The values in San Fran dropped all the way down to now $723,000. So that's a big drop. That's $100,000 since 2022 in San Francisco. Anyway, let's get to the ones that you wanted to see. Oh, shoot. I didn't share that. That's hilarious. Come on, Jay. Sorry, guys. All right. Well, that was embarrassing. That's how lives go. Anyway, this is the Resi Club map. So I was talking about San Francisco, $823,000, now $723,000. And I was looking at Columbus. You can see it was down at 96,000 for the typical home value. Went all the way up to where we are now, $234,000. But let's do the ones that you wanted me to look at. Sorry for not sharing it earlier. My bad. Cook County, Illinois. Let's look at that one. Let's look at Cook County, Illinois. So I'm going to switch to county. All right, here you go. Cook County, Illinois. Home prices up 2% year over year. And if I look at the typical home value, you can see it is now $346,000. So a good example of where home prices are continuing to go up. Now, what they said was that the inventory is dropping. Or I'm sorry, raising. He said they have more homes on the market. Let's look. Well, active inventory is down. Unbelievable, right? Active inventory is down 3.5% in Cook County year over year. And look at this. We can look at active inventory versus 2019. You've got 55% fewer homes on the market in Cook County than you did in 2019. Crazy, right? Look at the active inventory count. Look at this. This tells the story of the housing market, folks. You can hear anything you want. You can believe anything you want about inventory going up. And it's sad that more YouTubers don't present data. They just tell a story. I'm seeing home prices decline in these markets, or these markets are done for. They're doomed. It's well, give me some data. Tell me something. Give me something I can use. Like, what, you know, instead of just a story that you're regurgitating on everybody's channel. Like, I mean, 2019, Cook County, Illinois, 20,723 listings. Now, 9,164 listings. It is what it is. Half the listings. Half the listings. Now, let's find out exactly where that's happening inside of Cook County. Whoops. This is a zip code look. So here's Chicago and Cook County. So we're zooming in here on home prices, folks. I mean, we're getting granular. Look at this. Whoops, I don't want to do that. All right. I kind of still getting used to it. But look at this zip code. Home price is down 7%. Down 7% in this zip code, which is 60649 in Chicago. So there are areas, and that's what we're going to look at today for the next, 50 minutes or so. We're going to look at it at a granular level. So 7.4% down in Cook County in this one zip code. Look at this zip code. Home price is down 8.8%. But overall, if you look at the Cook County, home prices are up. Like this zip code 60629 is up 5%. 60425, sorry, up 3.5%. Anyway, this data I think is pretty powerful. So overall in Cook County, seeing higher prices, lower inventory. Let's look here at inventory levels and see what we can find. All right, inventory. So where is it going up a lot? Look at this, 60422. Inventory is up 45%. Holy shnikes. 60473, inventory is up 46, almost 47%. But then there are areas like this, 60636, down 9%. 60619, down 8%. Right against Lake Michigan, right? Find one that's up a lot. Look at this one, up 57%. Did we do that one already? Wow, look at this one, 60428, up 131%. So there are areas, it just depends on where you live inside Cook County, where inventory is going up and prices are going down. And if I zoom out to I'll show you an area like Ohio. We got the same thing going on. Like if I look inside, like overall, Ohio is lower than we were pre-pandemic with inventory. But look at this. 43050, which is Mount Vernon, down 19%. But look at this, 43074, up 43%. Inside Columbus, like some of these areas are getting destroyed. Look at this one, 43026, which is like the Hilltop area, Franklinton. Inventory is up. Are you ready for this? 61% inside of Columbus. So, you know, make no mistake, it's not everywhere evenly distributed. All right, let's do another area. That was Cook County, though. Should look at Hays, Kansas. I don't know what zip code that is, so you give me a zip code would help. I'll find out. 67601. All right, let's do 67601. What do we got? Inventory up 27% year over year. Got more homes for sale. They said that too, right? Should look at active listings in Hays, Kansas, going parabolic during a time when it's normally dropping. Good catch. Good catch. Let's look at inventory versus 2019. How's that doing? You're still down 31% compared to 2019. So you're still under pre-pandemic levels. That's kind of that demarcation line, right? Let's look at inventory count. How's that doing? So you look here, you can see back in 2019, you had 116 homes on the market. Shoot, in 2017, you had 149 homes on the market. Now you've got 80. So that number is going up. You're right. Great catch. Well done. Well done. You know your market. Let's look at home price growth and see how that's doing. Well, you're up 7.5% year over year in home prices there in that zip code. Let's look at the home value. So you haven't dropped. I mean, look at that consistency. It just continues to go up and up and up and up. $251,088 right now. Okay, Connie, give me a zip code in North Platte, Nebraska, by the way. I'm just curious. But anyway, that's what's going on in Hays, Kansas. Let's see, who else has one? Plain City, Ohio. Yes, let's look at it. I'm curious myself. What zip code should I use? I don't know if they're going to give me, I probably have to find out. $43064. Let's do that one. Oops. Come on, Jay. What in the world? There we go. 43064. So let's do active inventory year over year. How's that doing? Down 21% in that zip code. 21%. Let me just look and see if you, okay. Yeah, 21%. Now let's do prices. See how that's doing. Well, you know what? Let's look at inventory count. You're actually up 3.2% in 43064 in Plain City, Ohio. You have 3.2% more homes on the market than you did 2019. Now, important to remember, new construction is going to follow this, right? So if I click into this and look at the details, you definitely have more homes for sale than you did in 2019. And a lot of that are the new homes out there. I mean, I don't think there's a lot of more existing homes that from like 1920 in Plain City when there was no development there, right? So I'm guessing that's a lot of like that area of Jerome Village and that northwestern quadrant of the Columbus market. Definitely a lot of new builds there. So you have more inventory. That's good. But let's look at prices and see how that's doing. Home price is up 1%. See, folks, this is what I'm saying. Unless you're blind, look how the home prices were going parabolic in 2021, 15%, up 16% year over year. I mean, unsustainable, right? Then it dropped slightly during the winter of 2022, then went whoop, way back up. I'm sorry, dropped in the winter of 2021, then way back up in 2022. Then it dropped down, didn't go negative, but definitely is cooling. I mean, the home price growth in most markets is cooling. Let's do typical home price. $548,765. So in that zip code, what I'm seeing is a leveling off of prices because you have more inventory for sale. Plain simple. No pun intended with Plain City. But that's what I see in Plain City. I hope that helped. Was that the right zip code? Oh, you're not answering, but that's okay. Hopefully that helped. All right, now let's do your next one. Good morning from Arizona. What's up, Lisa? 86409. You got it. What's going on there? Well, if we look at active inventory for sale, let's do active inventory year over year. You're up 45% in the number of homes for sale. Wow. Okay, that's good. How about since 2019? Look at that. You're up 108% compared to 2019. Jeez. Active inventory count. Yeah, look at this. 148 homes on the market right now. I mean, you had a lot of inventory. You had an explosion in 2022, but look back historically. I mean, you had nothing on the market. Man, you're in Kingman, right? That's Kingman, Arizona. Like, if I'm looking for a house in like Lake Havasu, I know several people in Lake Havasu. Like, I'm shopping, man. I'm out there making offers. Like, it's I mean, you're a realtor there, Lisa, so you tell us, but I mean, it looks like there's some opportunity, I would think. Let's look at prices there, see how they're doing. Yeah, look, home prices up 1.2%. At one point, you were actually down, right? Like in May of 2023, July of 2023, down 5%, down 5.8%. If I look at a typical home value in Kingman, $261,000. Remember, this is typical. This is that 35th to 65th percentile. This is not a median sold price. That's not how they do this. It also does not count the low end or the high end of the market, which I kind of like. But you're off from the peak. I mean, if I can also do this. Check this out. I can say since 2022, you're actually down 4% since 2022. 5-year home appreciation. So this means at 42%, your house is basically a house is worth 42% more than it was 5 years ago. But look how that's declined. Like if you, this is crazy. Like if you go back to 2022, at that point, homes were worth 93% more than they were in 5 years earlier than that. That would have been like 2000 and what? 17. But that number that's falling. So this whole thing where people are like home prices have exploded 50% in 5 years. That's no longer happening. And as we go through time, if prices continue to come down, that narrative is kind of blown up. It's kind of blown up. We could just be a slow grind down, right? No drastic move either way. And that's what I'm seeing so far in these charts. I hope that helped. That was a cool look. What's up, Tam? How are you? I enjoy your videos on Facebook, by the way. Really good. Very, very good. Perhaps you've already covered this, but how's Southern Orchards? Oh, I got the wrong zip code. Yeah. Southern Orchards 43206. I looked at that earlier. I did. I looked at that. It's coming down. 43206. I thought it was Franklinton, but what's going on here? Apologies. Sorry. What in the world's going on with this thing? Sorry, folks. There it is. 43206. Okay, wrong. I didn't do this already. My bad, Tam. So inventory up 9.7% year over year. Prices down 0.6% in home prices in that zip code. 0.6%. Let me look at the value. Well, let's look at the inventory first. You've got 5.2% more homes on the market than you did in 2019. And if I look at active inventory count, it's definitely growing. I'm guessing a lot of flips. I think we talked about that when we were face to face. But yeah, I think you've got 142 homes on the market now. Like last year you had 128 homes on the market. Year before that, you had 98 homes on the market for September. Then you had 97 homes on the market. So inventory is definitely building there. Definitely. So something to be mindful of. Obviously, as that inventory continues to grow, you're going to see prices probably start to move down further. Look at median days on market. What's that? Up 8 days year over year. Let's look at median days on market from a trend. 66 days right now to sell a home. I'm guessing, again, a lot of flips, but that's just a guess. Thanks for suggesting Southern Orchards. I did Franklinton, I think, earlier, but thanks, Tam, for suggesting. Oh, Lisa, what site am I using? I'm using the Resi Club Terminal. That's what it's called. So let me see if I can. I don't know if you can see my screen, but this is what it's called, and it's from Resi Club, brand new this week, and they allow you to look at all kinds of stuff. Like I can go into like some of this isn't all dialed in yet, but like I can even look at forecast and look at what's the forecast for a zip code. Why it's not zooming into that, I don't know. It's kind of frustrating. Whoops. Obviously, I'm not that versed in it yet. But if I look at forecast, I can basically look at some metros here and zip codes and see what Zillow thinks prices are going to do over the next year. Like Pittsburgh down 0.3%. Here's where you are, right? Lake Havasu up 0.1% is what they think is going to happen. Some of these markets they think are going to drop a lot. But yeah, this is the Resi Club Terminal. I'm not sure why it's not zooming into zip codes anymore. That stopped for some reason. I don't know why. Oh, there we go. Now it's working. Okay. All right. I'm ready for the next one. Ma Deuce, what you got? 44839. Oh, up by the lake, huh? All right. Well, Zillow thinks you're going to grow 2.3% year over year, which is kind of normal, right? Like as an investor, I plan on 2% growth year over year. That's my long-term projection. Overall, 2% growth. That's how I do it when I look at, equity gain, if you will. I'm not projecting 10% growth. I'm projecting something moderate. So I think that's moderate. Home prices year over year, what have they done? You are up. See, folks, look at this. Up 5.6%. This is up near Lake Erie. But back in 2021, shoot, you were up 16% year over year. And that's slowed down, although you haven't crashed by any means. Let's look at the typical home value. $299,000. It's just gone up and up and up. What's really interesting is, look at if we look at the year-over-year value from Zillow, you can see that during the, let me see this. No, they're not going to give it to me. Shoot. I can't see the great financial crisis on here, on this chart anyway. But let's look at inventory. Active inventory year over year. Wow. Up 97% year over year, but you probably don't have that much inventory, right? Like as far as the numbers go. You're still down 28% versus the pandemic. And active inventory count. What do we got? Active inventory count. You've got 43 homes on the market right now. And that is more than you've had over the past few years. There's no doubt. So you probably are seeing more homes on the market, but still down compared to pre-pandemic. But like an area like yours, it looks like, prices are still running hot somewhat. Hot, 5-6%. I mean, obviously that's better than 18%, but it's not like you're crashing in home prices. I can also look at new listings here. Let me see if this can tell us anything. You're up 42% in new listings, but this data is kind of sparse because you don't have that many active units on the market. So it's a little harder to look at some of this, but median days on market's 58. Homes are sitting longer, I'm sure. Let's look. Oh, no, they're down 3 days year over year. I was wrong. Down 3 days. It's kind of its own little market up there, isn't it, though? Because it's next to the lake. Thanks for that. I hope that helped. Oh, going back to Kingman, Arizona, huge opportunities. I agree. I love Arizona. I do. Half of me wonders, like, I'm not getting any younger. So I'm like, I really like Arizona. Maybe I should go shopping now and make some crazy offers. I don't know. Because it's a cycle, right? So like, am I going to have to wait another 15 years for some kind of carnage in the market at all to the situation we're in now? I don't know. But thanks, Lisa, for suggesting that. Night Cry, how you doing? I recently realized something wild. Harris County, Texas, 40+ days on market, but one county north in Montgomery County says they are selling in 1 day consistently. I love your dogs. Is that a husky? I love dogs. Okay, let's do Harris County, Texas. Give me a zip code, though, Night Cry. Maybe that'll help me. But I'm going to look at Harris County while you're figuring that out. Harris County, Texas, home of Houston. Home prices down 2.5% year over year. Right? Home prices down 2.5% year over year. Again, just like a lot of other markets, it was up a lot and then came down. Let's look at the typical home price in Harris County, and then I'll do Montgomery County. Typical home value, $285,000 in Harris County. And that has come down from the peak. They peaked at $295 back in September of 2022, now at $285. A $10,000 off of the peak. Let's look at inventory real quick. Look at inventory, up 25% year over year. Since 2019, you're up 10% since pre-pandemic in Harris County. Let's look at the active inventory count. This looks completely different than Ohio, right? Way different. A lot of this is because of new construction, but look at how back in 2017 or so, let's do September 2017, you had 15,000 homes on the market. Then it went down during COVID, came back up. Now you're at 18,250. I mean, you have more inventory in Harris County than you did going all the way back to 2016. I mean, that's how far the chart goes. 2016, I wish it went to the great financial crisis, but that inventory data is impossible to get. I don't know. It's very frustrating. Per market, I can get it nationally, but not per market. I'd love to see how explosive the inventory was during the great financial crisis in different markets. But 18,000 listings, There's a lot of listings in Texas. I've actually made offers in Texas, Indianapolis, and Arizona. Threw some lines in the water when it comes to new homes, because there are a lot of opportunities, not for me to live in, but to invest in. Obviously, I haven't been able to land anything yet, but that's something I'm doing because the interest rates from the builders for investors are really good, and they've got a ton of inventory, a ton. But you got to really do your homework. So let's do median days on market now in Harris County. 53 days. That's what Realtor.com is saying. 53 days. Let's look at median days year over year, up 8 days. Okay. So homes are taking longer to sell. Now, you said Montgomery County, right, is next. You know what? Let's just go up one to Montgomery County, make it easy on myself. 7 days longer in Montgomery County versus last year, but you said it was homes were selling in 1 day. Let's find out if that's true. Well, I've got median days on market in Montgomery County at 57. So I don't know where that data was that you got, but it looks like homes are taking just as long to sell in Montgomery County, at least according to this data. Home price growth year over year, down 0.4%, kind of similar to Harris County. Let's look at the typical home price. How has that trended? Well, actually, this would be kind of interesting. Let me do this. Home price shift since 2022 peak. They're off 2.3%. And they've been off forever. Look at this, down, 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 down. Meaning ever since 2022, Montgomery County, I suspect Harris County is the same way, home prices have dropped. This is interesting. Look at this. I didn't see this. 10-year home appreciation. Kind of a cool stat to look at. Wow. Now 51%. So I think it was it Maud Deuce who said this? You have to think about being in your house for 10, 15 years. I mean, this goes back 10 years, and you can see how this is declining, right? Typical home value. What do we got? $352,000. It was $360 back at the peak, it looks like. So yeah, home prices on average dropped about $8,000, about that in Montgomery County. Let's see though if you gave me a zip. Did you give me a zip, Night Cry? Oh, 773. I wonder if it's because there are like over 10K homes being built. Many are selling on special zero down move-ins. Yeah, but builders are doing that. They're fire selling their properties. And guess what? Builders are not ramping up construction. Lumber supply is gone. Lumber prices are low. I follow a guy in Oregon, the Uneducated Economist, and he is in the lumber industry. Great channel to watch on YouTube. And he knows the lumber industry, and he's like, nobody's buying lumber right now. So builders are not building. So make no mistake, Night Cry, anybody thinking that, hey, builders are going to continue to build, inventory is going to explode in new construction way more than it is now. Well, it's not. I mean, inventory actually dropped, 2 months of supply? It dropped from 9 months of supply to 7 months of supply recently because builders have dialed it back. So you've got a lot of these programs that builders are trying to use to fire sale their properties. If it's me, I'm taking advantage of it if I need a house. I'm not saying buy a new house. You have to get an inspection. You got to do your due diligence. You got to make sure that it matches your debt to income ratio on what you want. Right? You can't just run out and buy something, but it's a good place to go shopping. That's for sure. Let's look at Montgomery County, 77304. Is that where you live, by the way? Just curious. Zip code. Seven 77304. What do we got? Well, similar, right? Home prices peaked at 352. Now they're at 336. Let's look at year over year, down a half a percent in that zip code. But at one point in that zip code, they were up 20% year over year. These years right here, it's literally like a handful of months crushed the housing market in most areas, just crushed it. And I think this can kind of give you perspective on what's really happening. When you hear people say there's a ton of carnage in these markets, or these markets ran up in home prices, you can kind of get a picture of what's really going on when you look at a expanded view of the chart. Here's the other thing. I wish, oh shoot, it doesn't have it in here. I wish it told us the home values during the Great Financial Crisis. Let's find out if this does. Yeah, like look at this. Look at the home values during the Great Financial Crisis in 77304. Remember this, when people compare now to the Great Financial Crisis and they're like, it was horrible then, values plummeted. Well, they went down, but they were at, look, 196, 196, 191, 188, 184, 191, 200, 213, 235. Point is, they didn't crash 100 grand in 77304. They went down, what's that? 16 grand? No, 6 grand. 12,000, sorry, 12,000 bucks during the Great Financial Crisis in this zip code in Texas. It's not like they went down 100%. Anyway, a lot of people think they did. And it wasn't even everywhere, right? So let's look at days on market, though. See what you got. Median days on market, 54 in that zip code. Let's look at inventory. Active inventory count, 318. So you definitely have more than 2019. Look at that. You had 311. Now you got 318. So barely more, but certainly growing. Thanks for that, Nightcry. It's good to see you. Thanks for watching. Christine Zimmerman, good morning from Ohio. OHIO. 9:34. All right, I've got about 20 more minutes. The realtors in Montgomery County were saying that everything is selling in one day and showed me a chart. It's funny. That looked like Fred, maybe just full of horse hockey. I don't know what they were looking at. I don't understand how one day that wouldn't even be a chart. That'd be like nothing. I mean, what I'm showing is, this is realtor.com data. You can probably go to a realtor.com, the back end of realtor.com, and show them what realtor.com says. I don't know. I don't, it doesn't seem like that's accurate. Look, just like sellers, there's a lot of realtors that are in denial. Now, I'm not in denial. I don't care. I don't care if the market moves this way or that way. I'm not going to tell you things that are, just to sell a narrative. I just don't care. I'm just going to present what's there. And then, you make your own decision. There's too many people that you may be listening to out there that are like, hey, I want the market to crash because I didn't take advantage of it when it did crash. So I want it to crash again. Therefore, I'm going to pretend that it's crashing. And there are others like this guy, I guess, whoever Nightcry's dealing with. It's like, oh, the market's fine. Yeah, not good. McConaughey, how you doing? Uneducated economist was saying lumber couldn't go down 6 months ago and called me an idiot when I told him it hadn't hit bottom yet. His arrogance clouds his predictions. Okay, not going to deny that he has some arrogance. Not going to deny that, but he also works in the lumber industry. And if you look at the permits, and if you look at inventory of new homes, it's down, it's falling. The inventory is falling because builders are pulling back. It just makes sense. If you're a builder right now, why would you build? The other thing, McConaughey, is that he does tell it. I think he's genuine in his beliefs. I think he is. I'm not saying he's accurate 100% of the time, but he also tells people a lot of things they don't want to hear. And that's always refreshing for me. There's always, the bigger they are, the harder they fall perspective. Texas was always cheaper than most places, so the GFC impact was definitely less there. Yeah. There's some areas that went up. Like Salt Lake City went up. I think Pittsburgh went up. So when someone says this is going to be worse than the GFC, I'm like, okay, but prices went up in some areas. So you mean the prices are going to go up further? I don't know. Nevada real estate is a casino. It booms and busts the hardest in the country. Let's look at it and find out. Where am I going to go in Reno? The biggest little city, right? Reno, Nevada. Active inventory count, 1,794. You're just under pre-pandemic. Like if I look at active inventory versus 2019, you're still 10% under that inventory. If I look at active inventory count, you're at 1,794. We already looked at homes. And yeah, you had 2,007 homes on the market back in 2019. Let's look at year-over-year price gain or decline. Only up 0.3%. Definitely softening. There is no doubt it's softening. Home prices since the peak, you're down nearly 5% since 2022. So home prices haven't appreciated since 2022. I think that's where you're going to see the most pain, right? People who bought in that period of time, if they need to sell right now. Home price shift since 2020, 40%. So what does that tell you? In those 2 years, from 2020 to 2022, prices went way up, just straight up. I bet we'd see that if I go back to this. Yeah, look at this. See, 26%. Come on. Is that right? Yeah, it is. 27% increase in home prices year over year in July of 2021. These 2 years just wrecked the market. I mean, it wasn't healthy during this time either back in 2013, but it was really bad right through here. Home prices just went way up, and that really caused some problems. Let's look at the typical price real quick. 364 in Reno as the peak, around the peak, right? Now you're at 317. Home prices are definitely lower. I'm curious what this says. 10-year home appreciation, 104%. So if you bought real estate 10 years ago in Reno, you're up 104% on average, according to Zillow data. It's not exact for every house, obviously, but that's just a general ballpark rule. Let's look at the 5-year gain. This is really cool data. 39% in 5 years. I mean, it depends on what you want to do with real estate. If you're like, I'm going to put my money into a house and I'm going to get rich from your primary home, there are ways to do that with house hacking, definitely. But unless you find an amazing deal that needs sweat equity and you time the market right, you may not become rich from buying that house. Many investors say the primary house is like not what you should do. You should rent and invest in real estate. I can't argue with that. I mean, 39% growth in 5 years, like, you just look at some of the other assets out there like Bitcoin, gold, the S&P, the NASDAQ, and I'm not a financial advisor and this isn't investing advice, but just look at the different charts and look at what makes sense. A home is a home. A rental property is an investment. That's how I look at it. Reno is interesting. I like Reno. I haven't been out there in a while though. That's Reno. What else? Bought in 2012 for 170,000, sold in 21 for 465. Goodness gracious. Oh yeah, good job. You sold right at the right time, according to this. Man, you timed that like a pro. Like if I go back to this chart, like you did. Yeah, you hit a home run there. Typical home value. Like you bought in 17, you said, right around here, 206, right? And then you said you sold in 21. Yeah, I mean, Great job. You unloaded, no doubt. Well done. Here's another thing I'll do here real quick before I run. If anybody else has one, maybe to look at. But if I look at this, ooh, look at that. How would you want to be able to rotate it? I don't know. The states in blue are up year over year in home prices. The states in red are down. So you've got states like New York up 4.2%, Pennsylvania up 3%, Ohio up 3.4%, Indiana up 3%, Illinois up 3%, Iowa up 3%, Minnesota up 2.4%, North Dakota up 3.8%, Wyoming up 5%, Kansas up 2.5%. Nebraska up. Let's look at real quick. Let's do North Platte, Nebraska. Up 4.5%. I had a viewer on here from Nebraska. So, yeah, up 4.5%. At one point, you were up 12%. Okay, let's look at the inventory and see how you're doing. Active inventory count 86. Before the pandemic, you had 184, way down compared to the pandemic as far as inventory goes. Active inventory versus 2019, down 53%. Wow. Yeah, not a lot of inventory there. But anyway, if I go back to states, what's this doing now? Some of the markets that are down: Florida down 5.1% year over year in prices, Texas down 2.5%, Arizona down 3.2%, California down 1.7%, Oregon basically flat, Washington flat. I mean, it's easy to see the pain is in the South, the Texas market, the Southwest. But like the middle of the country and the Northeast is overall doing well. I mean, look at Connecticut up 3.9. Look at New York up 4.2. New Jersey up 3.7. Even Maryland 1.7. Delaware up 2.5. And if I go to a county look, it becomes more clear, right? Red is bad, blue is good. Where's the blue? Through this section here. Where's the red? Bad, through this section here. Like, I've heard somebody recently talk about how Westchester County, New York is crashing. So I want to find out if it is. It's like right through here. I can just probably Westchester County. Let's find out if it's crashing. Westchester County up 3.5% in home prices year over year. Let's look at inventory, because they said inventory was exploding there. Like they had tons of inventory. Well, let's find out. 1,547 homes for sale in Westchester County. In 2019, they had 3,900 homes for sale. Yeah, wow. Compared to 2019, Westchester County, New York, don't get it twisted, down 61% since pre-pandemic in inventory. That's not a crash. That's a crash down in inventory for sure, but I don't think that's what they meant. So this tells the story. Anytime you hear anybody spout off about the market, say, well, give me the data. Show me the data. The housing nerd does. I'm like, hey, here it is right here. I mean, some of these areas with inventory, look at this. This will blow your mind. Watch this. Inventory versus 2019. So the green states have more inventory than 2019. The brown states have fewer homes for sale. That's how it works, right? So where were we? New York is down 42% in the number of homes for sale versus pre-pandemic. Pennsylvania down 38%. Ohio down 30%. Indiana down 11, Illinois down 60%. Look at, this one's dark. Look at Vermont down 50%. The green states have more inventory. Tennessee has 34% more homes for sale. Florida, 22%. Texas, 31%. Colorado, nearly 30, 29%. Arizona, 28%. Utah, Idaho, Washington. But California still has fewer homes for sale. Oregon has a little more inventory. Nevada, 4.4% more. Right? So brown, fewer homes for sale than 2019. Green, more homes. If I look at a county level look, the South continues to struggle, right? Look at the South, more and more inventory, right? Some of these markets are up a lot, these counties. Like, I don't know where Bastrop County is in Texas, 97%, almost 100% more homes for sale. In Florida, similar story, right? Like, if I go on the coast here, Sarasota County, 18% more homes for sale. But like, again, the Northeast, the Midwest, not near as many homes for sale than you do down south. That's where all the deals are right now. And some of these markets really surprised me. Like, if I go to Fulton County, Georgia, this is where all that Airbnb pain is, supposedly. Inventory's down 12% compared to the pandemic. So it is what it is. It's just the data. Any last minute requests before I jump? Oh, I got one. Oh boy, I got a few here. Sad in New Jersey. Yeah. Hey, again, the data is the data. I'm sorry. Yeah, there's not a lot for sale, I'm sure. Yeah, no doubt, Lisa. I love hearing story. Thank you for sharing that, McConaughey. Like, if you have a win or a loss, I'd love to hear about it. McConaughey hit a home run there. What's better between Resi and Reventure? Well, to me, Resi, because the guy is he was a writer for Fortune magazine. He has no bias at all. Lance at Resi Club Analytics has no bias. If you listen to him talk, he's like, these are the facts. I like that. The other thing is that he gives you all the data I'm showing you for one price. Like, you pay for his premium subscription, you get everything and all of his insights in his articles that dive into the housing market way different than Reventure does. So in my opinion, Resi Club's where it's at, because I think with Reventure, you have to pay and you get like one zip code or something. That's garbage. That's a worthless subscription as far as I'm concerned. Unless, well, I can't say that. If you're looking in that one zip code only, hey, that works. But if you want to know about other markets, doesn't help. It would be a waste of time for me. So I like Resi Club. They just launched this yesterday or the day before. I didn't even know what was happening. I got the email. I was like, what's this? Holy cow, this is awesome. Ranger, hi, how you doing? All right. Will I look? I don't know what you mean, Ranger. You say no response. I don't know what you mean. You know what? I don't have an affiliate link for Resi Club. They don't do that. I mean, there's a link in my description below, but I don't make anything for it. I'm just sending people there. All right. I got 2 more to do, then I got to jump. Maybe 3. All right. Let's do Fresno real quick. Let's look at the county, Fresno County. Inventory is down 13% since before the pandemic. Year over year, you're up 20% in the number of homes for sale. So you are gaining inventory, but you're still below pre-pandemic levels. If I look at the typical home value is $410,000. That's actually up from the peak. It looks like values continue to grow there. Let's look and see. Yeah, well, you're flat. This year, you're flat in Fresno County, 0% growth. You can see, though, the home price growth has been slowing. And if you just look at this, You look at this typical home value. Look how it's like flat now, right? It's like it's kind of flattening out. It's no longer going straight up. And that's good if you're looking to buy, right? It's no longer that parabolic growth. Let's look at median days on market real quick. Median days on market, 54 days. Okay. Now, let's do the next one. Hope that helped. That was Fresno, San Diego. Yes, San Diego. Love San Diego. I was born there, actually. San Diego. San Diego County, median days on market, 49. So it's up compared to last year where you were at 40 days. So homes are taking 9 days longer to sell. It's a good sign that there may be an opportunity out there, although I don't know about San Diego. It's probably still very difficult. But you're down in home prices in that county, down 2.5%. Again, home price growth slowing, no doubt. $952,000. It's crazy how expensive homes are out there. You peaked at $1 million. Now down 9. Is that 52 or 82? I can't tell because my screen. 982 or 986. Sorry. So you're down a few $1,000. Inventory. This will be interesting. You're up 25% in the number of homes for sale. Active inventory count. 5,800 units on the market right now. Back in 2019, you had 6,587 homes on the market. So you are gaining inventory. I mean, that trend is up. I mean, you'd be blind to say that, right? That it's definitely up. More and more homes entering the market. Let's look at this and see what they say with home price. 10-year home price appreciation. 93% right now. Man, if you had sold in 2022, you had 165% 10-year home appreciation. 5-year home appreciation, 48%. Okay. I hope that helped for San Diego. His articles are where it's at. Yeah, agreed. And if you do the premium subscription, you get both of them. You get this data portal. I don't know if they have an app yet on the phone. I'm not sure. I haven't checked that out. Maybe they do. Oh, you're a thumbnail designer. Oh, that's right. Okay. I don't know. Well, I'll have to check my emails again, Ranger. I'm sorry. Rental rates in Fresno. Okay. Yeah. Was that Kobe? All right. Let's see. Rental rates in San Diego. Is that what you said? Oh, in Fresno. Let's look at rentals. They do have data for rentals. Typical rent in Fresno, $2,054. I mean, it's not going up. I mean, it's going here. It's up 2.9% year over year for August data in Fresno County. So they are increasing. I mean, that's what I plan on my rentals. I plan on a 2% increase year over year. That's just, with inflation, right? That Fed target that they can't point to or calculate for anybody, 2%. So they're up 2.9. Look at this. Rents were up 20%, 19% year over year in 2021. That's nuts. They actually break it down by single family rent. Oh, maybe not for the county level. It's probably just a metro look. We can actually look at price reduction share too. How many homes are being reduced in price? 16% in September for Fresno County, California. I didn't look at that in the other metros. Obviously, a lot of data to look at, so I can't look at all this. So I hope that helped. They've been lowering. How much could rental prices be down? How much could rentals bring prices down? I mean, it doesn't look like they're falling like year over year. It's just that the growth is slowing. But I'm sure there are deals and incentives out there for rentals. All right, last one, McConaughey. Truckee. All right, I'll do this one. I got a jet. I got another one to do. Oh, Truckee. There's a ski resort there, isn't it? Well, the rent in Truckee, the median rent or the typical rent, $3,175. But you didn't really ask about that. Let's do home price growth year over year for Truckee, down 1.6%. Yeah, so it's just kind of grinding sideways. Although there were some months where year over year prices for homes were like, look at that, down 8% in 2023, down 8. Yeah, definitely some areas or some times when home prices were falling in Truckee. Let's do home price typical value. Yeah, you peaked at 536 in Truckee. Now 477. So it's at 60 grand approximately. Let's look at inventory. Up 3.4% year over year. That's it. But what about 2019? You're still down 30% versus 2019 pre-pandemic. If I look at active inventory count, 642 homes on the market for that county or that metro, I'm sorry. And back in 2019, you had 924. Wait a minute. You're down 30% versus 2019, but active inventory count 924. Yeah. Okay. Yeah. 924. Now you have 642. So fewer homes on the market versus 2019. But prices don't seem like they're going up like exponentially at all anymore. Ten-year home appreciation, 62% in the last 10 years. Since the peak, you're down 9% since 2022's peak. And if I look at since 2020, you're up 25.9, 26%. So I guess you are seeing more homes on the market, but the question is, are they homes that that don't need a ton of work, or are they homes that need a ton of work? I guess, I don't know this from the data. Hopefully that helped, McConaughey. All right, guys, I got to run. I hope this helped, this new way to look at the market. If it did, give me a like, give me a thumbs up, share my video with someone else. And we'll do this again soon on the Housing Nerd channel. Have a good day.